Hey there, my money moguls. Welcome back to another episode of the Do Different Better Show, your go to for wealth wisdom, money moves, and financial truth telling that actually makes sense. I'm your host, Elaine Rasmussen, and today I'm super excited about answering a really crazy question that I get all the time, especially from my entrepreneur and side hustle folks. And that is, Elaine, what the heck is a holding company? And do I actually need one? So I'm going to be breaking this down plain and simple. So, first, let's talk about what actually is a holding company. A holding company is a business entity that exists not to run a business, but to own a business. That's it. Think of it like the landlord of your business's assets or intellectual property. Let me say it another way. A holding company doesn't do day-to-day work, right? They it owns the companies or the assets that actually do the work, right? So here's a real world analogy using sci-fi. Picture a mothership flying in space. It holds and manages multiple smaller ships. Think about the Starship Enterprise, right? With each smaller ship has its own mission, its own crews, and its own tools. That's a holding company. The mothership doesn't drill oil or run the restaurant or teach the course. It just owns and oversees the entities that do that work, right? So hopefully my Star Trek analogy didn't throw you off, but think about the Starship Enterprise with a whole bunch of Starship Enterprises inside of it. And the big Starship Enterprise is just making sure that all of those the smaller Starship Enterprises actually go out and do their mission, come back, are safe and together and all the things, right? So, what should a holding company own? That is an amazing question. The answer is almost anything. A holding company can own other LLCs or corporations, like your side hustles, your main business, etc. It can hold your rental properties or investment properties or commercial real estate. It can also own your intellectual property. Think about your course content, your software code, your brand assets. It can also own equipment, vehicles, or even art or media rights. It can also own stock in other companies. So, yeah, it's kind of the ultimate wealth strategy chest. Here, let me talk about some big names that you may have heard of because it isn't just for millionaires, but they've definitely been using it. So, the big one that you might be aware of is Berkshire Hathaway. This is Warren Buffett's famous company. It is a holding company and it owns Geico, Dairy Queen, See's Candy, and a slice of almost everything else, right? Then there's also Alphabet Inc. Alphabet Inc. is the parent company of Google, YouTube, Waymo, and more. There's also Jay-Z. His S. Carter Enterprises has held various brands such as Rock Nation to liquor investments to art. And then, of course, there is the amazing and ever beautiful Rihanna. Her empire is structured so Fenty, Savage X Fenty, and her publishing rights are held in separate entities under centralized control. The structure allows these folks to move like corporations, even when they started as individuals. So you're like, well, why should I care about any of this? Here's the deal. Most of us have been taught to build one business, one bank account, one tax return. But in this economy, in this era of multiple income streams and side hustles and real estate plays and creative ventures, all of which you've learned about by listening to the Do Different Better show, you don't need more hustle. You need more structure. A holding company can protect your assets, simplify your taxes, and help you grow without chaos, but also build a real foundation for long term wealth and legacy. And probably most importantly, it can keep your businesses from messing up your personal life. And I'll get into that in a little while. So let's talk protection. Let's just say you own a cleaning business and a customer sues you. And if your cleaning business is owned by your holding company and your personal name isn't directly tied to the day-to-day operations. Your personal savings, your house, your investments, they're safer. And if you own multiple businesses under one holding company, you can keep liability from one hustle from touching another hustle, right? Hope that made sense. What this allows is putting your income under one roof. So I want you to raise your hand if you've got a consulting gig, raise one finger if you have a rental property, raise one finger if you have an online course, raise a finger if you're thinking about launching another product line. Instead of trying to manage all of these as separate, messy side hustles under your name, a holding company allows you to own them all strategically with structure and intention, and but allowing them to all live separate lives, right? Think about a frat house or a sorority house. Everybody's living under the sorority, in the sorority, but everyone's got their own individual life. But everybody is responsible for the health and care of the sorority. So, story time. Let me give you two characters. First, Side Hustle Sam runs 3 businesses under his Social Security number: one Venmo, one PayPal, one Cash App. He's drowning in receipts and gets audited every 2 years, and nobody's clear who owns what, sometimes including him. Then there's CEO Simone. Simone has a holding company called Simone Enterprises LLC. Under it, she has a rental property LLC. She has a coaching business. She has a digital product store. Each has its own business checking account, and all profits roll up to her holding company. She files taxes once, deducts expenses according to each one properly, and her legacy is legally protected. Say somebody sues her consulting business, it will not impact her other businesses. But if all of her businesses are under her Social Security number, somebody who's suing her coaching business could actually go after all of her businesses because her name is directly linked on one Social Security number to all those businesses. So that is the big difference of like protection, right? I don't know about you, but I want to be on Simone's team. I don't want to be on the other team. Okay. Now let's talk about types of holding companies. You can form a holding company as an LLC. An LLC holding company is low maintenance, and it's pass through taxation, meaning it's going to come to your individual taxes because all the revenue is looked at as your just personal income. And I've done a whole show on entity structure, so you might want to listen to that if this is too high level and you want to get into the weeds a little bit more. So we already talked about LLC. There's also a C Corp holding company. This is a little bit more complex and is often used when you're trying to raise capital to buy a business or raise capital for your business. And then there's an S Corp, which is limited to 100 shareholders. It is also has passed through taxation, potential payroll tax savings. For most solopreneurs and small business folks, an LLC is the simplest and most flexible structure. But always, always, always talk to your CPA or attorney to be able to make that analysis or give you that recommendation based on your goals and the size and scope and scale of the business or businesses that you're putting into the holding company. Now, let me be clear. It is not for everybody. You know, I'm going to keep it 100. It's not always time to form a holding company. If one, you only have one stream of revenue, do not start a holding company. You're just getting started. You haven't yet built a consistent profit stream, then you need to start small. Form an LLC, open your business bank account, and focus on profit first. The holding company conversation is for folks who are growing multiple businesses, they are owning or licensing assets, they are building something they want to sell or pass down. You don't need to be a millionaire, but you do need to be very, very intentional about what you're doing, okay, and why you are doing it. So, I hope you're starting to get an understanding of like why the holding company can be really important. The biggest thing is just being able to concentrate and have everything under one roof. So think about your businesses if you had your businesses in three separate houses. Why would you be running to three separate houses to manage your business when you can manage everything under one? But once again, that legal protection, again, by having each of the businesses siloed, think of it as maybe I like to call them strategic business units. So while they're each a company, each each business still has its own identity. You're not trying to share an identity across the different businesses. So once again, going back to Berkshire Hathaway and Warren Buffett, Geico has its own identity, while See's Candy has also its own identity, but they're both owned and held by the holding company. So now let's do a recap of what we've learned. Let's land this segment with some really high level takeaways. Okay, first, a holding company is a legal entity that owns other entities or assets. A holding company does not do any of the work, right? It is just holding the assets that do the work, including any sort of intellectual property or other kinds of um, like real estate options. A holding company is a structure, not another side hustle. It is the container in which you are hosting all of your other businesses or assets. Three, it helps you manage risks. It helps you manage scaling up and think like an enterprise as opposed to just a side hustle. Holding companies are often used by billionaires and moguls and everyday people who are looking to build wealth with a vision. So, I'll give you an example. I think I shared in the Entrepreneurship Through Acquisition episode. I talked about my goal is to build a portfolio of companies. By building a portfolio of companies, I am going to eventually have a holding company that all those companies live within. Once again, they are going to be protected from one another, but it gives me a clean way to organize and have everything roll up into one place instead of having 20 tax returns. I have one tax return that is now based on the individual businesses or assets or real estate that I'm owning in the holding company. So, having a holding company is not a flex, it is a financial framework. And so, and y'all know on the Do Different Better show, we don't just talk about theory, we also talk about execution. So, coming up in the next segment, I'm going to be breaking down the good, the risky, the wealth hacks that come with owning a holding company. Because as you know, nothing is all sunshine and rainbows. What we also are going to be talking about the real benefits, the real watch outs, and the stuff rich people do quietly. But I'm going to be saying it out loud and loud for the culture, for my people. That's you. So I don't want you to go anywhere. You're listening to the Do Different Better show. I am your host, Elaine Rasmussen, and let's keep doing different and let's keep doing that better. And don't forget to check us out on YouTube. I'm hearing that many of you don't know that we have a YouTube channel. Check us out on YouTube and don't forget to send me a DM, send me a thumbs up, like and subscribe but I will see you after the break. Welcome back to the Do Different Better show. I'm your host, Elaine Rasmussen. And in this segment, we're going to be digging into what it really means to run a holding company and not the Instagram version, mind you, and not the hashtag boss life memes. We're going to be talking about talking the real talk about and the real risk and how the wealth class uses this structure like a Swiss Army knife. But you're going to get in on the ground floor, okay? Because I'm going to take you there. So, here's the good what a holding company can do for you. First off, it is amazing asset protection. And that is first and foremost. A holding company gives you a legal shield. If you're running multiple ventures or own real estate and you do not want everything in your personal name, Let's say someone sues your cleaning company. If that company is under a holding company and your real estate or your content brand is in another LLC, those other businesses are protected from any sort of suing liability that is restricted to the business that's being sued. Your holding company acts like a firewall against that, right? So when you are suing somebody, typically, let's say you're suing ABC Business, whatever are the assets of ABC Business and the social security number that is connected to ABC Business, anything that's attached to that is open to be taken as part of finalizing any sort of retribution, any sort of judgment, anything like that can go they can go after any of those things. Doesn't mean they're necessarily going to get them, but they can go after them. So that's that fire having that firewall between all of your entities, particularly your intellectual property. That's probably one of the most important things is that your intellectual property is protected against, especially if your intellectual property is feeding into something else. I often tell small business owners that their intellectual property should be held in a different company and then create a licensing agreement for that intellectual property to the company that is actually using the IP, right? So let's say you create software. The software itself, the intellectual property of the software should be held in one company. The company that's using the software should be a different company. So let's say the company that is using the software gets sold. You still get the benefit of having the intellectual property and being paid even after the company is sold. You're getting paid for the use of the intellectual property that you actually created. So that's one way to think of it. But now let's move on to number two, the second reason. Number two is tax efficiency. Here's what wealthy folks will not say out loud. When you have a holding company, you can manage income strategically. Here are the ways that you might do that. You might take owner distributions from one business and leave profits in another to reinvest. You might want to deduct shared business expenses like accounting, legal, or admin through the holding company entity. And depending on your setup, you could optimize for self employment tax with an S Corp election. Okay. You can also use depreciation from one LLC to offset the income in another. Another thing you can do is control when and how you pay yourself. Now, here's the disclaimer. This is not tax advice, but this is why your CPA should be on speed dial, right? Number three, centralized management. One of the dopest things about having a holding company is the ability to simplify your administrative life. Instead of managing five different businesses like five wild toddlers, you have a parent structure like a nanny for all your babies. Okay. Here's something you can do. You can use one bank for the holding company, pay yourself from one place, file taxes with one K1 or consolidated return, depending on whatever your structure might be. Now, it's not always simpler right away. Okay. So let me be clear, but it scales better, especially if you're growing all of these variety of entities. If you know that you are growing your real estate entities, you're growing your consulting business, you're growing your teaching course, digital content. If you know that you're on a growth strategy, doing it early could make sense for you. But once again, get legal advice, get accounting advice on like when is the best time for you to do that based on where you are currently and where you're trying to go. Number four, legacy planning succession. Now, this part right here, this is for my legacy builders. Okay. If you want to pass something down to your kids, your grandchildren, your nieces, your nephews, or even the community, you're going to need a structure to make it as painless for them as possible. A holding company lets you consolidate your assets, pass down ownership without giving them the job. Also, plan for succession, investment, and an estate strategy. This is how family offices and generational wealth actually move. 5, investment and acquisition readiness. Let's say you want to raise money for one of your ventures or buy a business down the line. A holding company helps you look legit. With it, you can offer equity in a clean, separate entity, acquire other companies and drop them under the mothership holding company. You can partner with investors while protecting your personal stake. And you can have a holding company. And by having a holding company, it makes it easier to act like an institution and not just a solo entrepreneur, right? And we love that. Now, once again, I'm always going to keep it 100. So let's talk about where holding companies can actually go wrong. Number one, complexity equals confusion. Listen, if you already don't have solid systems, a holding company can become a hot mess real quick. And here's what you're going to need: you are going to need proper bookkeeping for each entity, right? Not necessarily an accountant, but bookkeeping, right? And so you need a bookkeeper who's actually going to be understand all the ins and outs of each one of these. Or if you want to hire 5 bookkeepers, I don't recommend it. Maybe you might need 2, or you might need a bookkeeper and a controller to help manage the cash going in and the cash going out, and make sure that you have good processes and procedures so that you can detect when fraud is happening. You can manage like how things are being coded, so you understand what's happening in each business. But you want to have separate bank accounts. Do not commingle funds across the different entities in the holding company. You're definitely going to want a CPA who understands multi-entity strategy and the legal paperwork that clearly defines what's owned by whom. Otherwise, the IRS will treat you like you're trying to be slick, and you don't want that smoke. I promise you, nobody wants or needs the IRS coming after them under any circumstances. Number 2, you need to understand the startup and maintenance costs because it is not free. You're paying state filing fees for each LLC. So, especially if you know that you have LLCs in a variety of different states, you are also paying the state fees in each one of those states. And state fees vary, they are not the same. Some are higher than others, some are 2 and 3 times higher than others. So, definitely you want to be aware, particularly if you have entities that are in multiple states. You also have annual registration fees or registered agent fees. So not only do you have the renewal fees for your business every year in most states, you also need to file for what's called a registered agent. There are companies who do this. You can have registered agents, or you can have somebody be your registered agent in that state. Basically, what that is saying is that you are legitimately operating in that state and you have somebody in that state representing you, and your business in that state, that the state can go to if there are any questions or issues, that they have someone on record that they can call or email, or have a mailing address. You are going to want to have separate bank accounts. They can all be with the same bank. I don't have thoughts either way about that. But if you bought a business and that business is at a different bank, now you have to make the decision: do I want to transfer this account, which is its own set of work, to transfer the account to the bank you're in, or keep it at the bank where it is? I personally don't like to invite trouble into my life, so I would keep the bank account of the business I acquired in the bank that it's in. But once again, you're getting to that place of having separate bank accounts, but that is another set of statements that you're going to have to collect. So you just want to make sure that you're getting e-delivery for any statements, that those are automatically delivered to you instead of having to go and request those on every single bank account that you need them from. You might also have to do separate state tax filings, right? And all of those expenses add up. So, this is why I tell folks, don't set up a holding company just to look official. Make sure it's actually solving a need and that it has purpose and value for what it is you're trying to do. And once again, if you talk to your lawyer or you talk to your accountant or your CPA, probably more specifically, say, hey, this is where I'm sitting right now. These are the entities I have. Do you think it's a good time for me to start a holding company? And what might be the costs for that to be done? And what will be the ongoing cost for your services and now managing the taxes or the accounting for this company? Okay. Number three, over engineering way too early. Some people hear about having a holding company and start filing LLCs before they've even made any money. I need you to breathe. Just take a moment. Okay. If you are pre revenue or just launching your first service or offer, focus on getting one thing super, super solid. Do not build a corporate treehouse that has no floors on it. Okay. Please. So, but here are the things that you definitely want to start with. One, you want to start with an LLC. You want to start with a bank account. And you want to start with one business making consistent money. Once you've got multiple income streams or risk areas, then you can start to explore a hold co setup, right? That's shorthand for holding company, hold co. Number four, improper use or legal gray areas. Holding companies are legal, but if you start money moving or moving money around without clear documentation or claim tax deductions that aren't legit, you could end up in a lot of hot water, and we do not want that. Also, do not use the holding company to avoid child support, evade taxes, or hide from creditors. That is actually fraud, and the feds will find you. So don't start none, won't be none, right? But now I want to clue you in onto some rich people secrets and what they do quietly. The first thing that they do is they separate operating risk from ownership. Okay. So let's say you have a trucking company. The trucks, the employees, accidents, they all have risk. That's in the operating company, the company that's actually operating the business, right? Operating company. But the truck leases, the real estate, the trademarks, those are held at the holding company. So if something goes wrong operationally, the core assets are protected, right? The things that, remember, assets are the things that have value, right? Number two, they use management companies for shared services. So wealthy folks often create a management company, usually the hold co, that provides services like admin, marketing, HR to all the other companies. That allows them to centralize staffing, deduct shared expenses, move cash more strategically between the businesses. This is how you keep control and cash where you actually want it. Number three, they build investment vehicles. So some holding companies own only stock or crypto or real estate or royalty rights. They don't run any day to day business, they just hold wealth. This is how many people prepare to become an angel investor, fund other people's startups, or slowly replace their earned income with asset based income, right? Number four, they plan for an exit from day one. If you build multiple companies under a hold co, you can sell one and keep the rest, or spin off brands into the business into standalone businesses to raise money. Holding company gives you options. And the wealthy love options. And since you are my wealthy folks in training, you're definitely going to want to hear about this, right? So it's really, really important for you to, I want to just zoom out for a moment and really start to think about, is a holding company good for you at this moment? Or is this something that you need to plan for, right? So maybe you right now you have your coaching business and maybe you have some real estate that you own. Talk to your professional to see what might be the tipping point of when you should start to have a holding company. Maybe it's when you get your second or third property. Now might be the time to now build a holding company that can hold your business and each real estate entity that you have. So remember, we've talked about when in real estate investing, each one of those real estate companies or real estate uh, investments, it's recommended that they be their own LLC. So let's say you have a one at 123, um, Cherry Street, or Cherry Avenue, and you have another property that is 678 Spruce Street, and you have another property that is 8910 Walnut Street. It's recommended that, or it's a good idea, I should say, to have each one of those be their own LLC, and then all of those can come under the holding company as separate entities, but in the holding company. Now, your holding company can be a management company for those properties, right? So these are just some of the ways that you can think about how to leverage a holding company to not only protect your assets, right? But now I'm going to get into the actual breakdown of this segment. So here are the things about a holding company. Good asset protection, right? Tax and income flexibility. It's a cleaner structure for growth. It's great for legacy planning. It's also amazing for investor readiness, but it's also risky. There are legal and tax complexity that you're going to have to maintain. There are startup and maintenance costs for your holding company. It's really unnecessary for beginners, but it also has the potential for financial but it has the potential for financial sloppiness if you're not disciplined. But here's the secret sauce: keeping separate risky operations from your valuable assets. It allows you to use management companies to streamline costs. It also allows you to build long term investment structures, but also set up for succession and for sale. The bottom line: a holding company is like a pair of designer shoes. It looks amazing when it fits your outfit, but if you buy it in the wrong size, you're going to trip. Okay. So, definitely, I want to let you know what's coming up in the final segment of this show on holding companies. Now that we've broken down the why, the next question is the how. How do you actually set up a holding company? What are the exact steps? And when should you pull the trigger? And when should you just chillax? Okay. Segment three is going to be your practical step by step playbook for turning your empire into building a dream into a real legal structure that moves with clarity and confidence and cash flow. Okay. So don't go anywhere. I'm your host, Elaine Rasmussen, and this is the Do Different Better Show. Don't forget to check us out on YouTube at Do Different Better and stay tuned. All right, fam. Welcome back to the Do Different Better Show. I am your host, Elaine Rasmussen. And if you've been hanging with me for segments one and two, you already know we are not playing small today. We are talking about holding companies, and they are not just for the rich, but for the ready. And in this final segment, I'm going to be giving you the play by play on how to decide if you need one, how to build it, and how to run it like a boss, not a burnout. All right. So let's think about, do you actually need a holding company? Let's keep it real. You don't need a holding company if you're just getting started and you only have one service or product that you're offering. You don't need it if you haven't generated consistent revenue, or you don't own any other assets yet. But you should seriously consider a holding company if you have or have a plan to have multiple businesses. You own real estate, particularly multiple pieces of real estate, intellectual property, or other high value assets. You you want it if you want you want protection and separation between your income streams, or you're thinking about succession, fundraising, or exit strategies for any of the opportunities or businesses that you're involved in. But remember, you don't need to be rich to set one up, but you need to be structured and you need to be strategic. Okay. So now, for educational purposes only, here is a high level of how you set up a holding company. So step one is you want to choose a state to register the holding company. Most folks start in their home state, but there's also Delaware, Nevada, and Wyoming are becoming very popular for their business friendly laws. And you may have seen these on Instagram. Lots of people are talking about these. And each one of those states has some very specific opportunities and downsides. So just because you heard that Wyoming is a great place or Delaware is a great place, you want to understand why people think why those are great states and are those reasons good reasons for you. I think all too often people, what is it? Um, uh, Aim, point, fire, right? Like, so don't do that. Really understand why is Wyoming a great state? Why is Delaware a great state? And are those reasons aligned with your goals and what you need to do and where you are in your ownership journey? You're definitely going to want to register an LLC or corporation, but an LLC is fine for most people. You're going to want to name it a general name like your last name Enterprises or the brand Holdings, whatever that is, right? Then you're going to get your EIN number from the IRS. Now, all too often, I find that people are being charged to get a EIN number. Getting an EIN number is 100% free 99. Never, ever, ever pay to get an EIN number. You go to the IRS website. You can literally do a search in the search bar that says get EIN number. It will take you to the place where you can get an EIN number in minutes, minutes, minutes. Okay. For free 99. It is free. Getting an EIN number is free on the IRS website. Never, never, never pay anybody to get you an EIN number. There are a lot of scammers out there that charge to get you an EIN number. It is totally free. If I said it again, I'm going to say it again. It's free. Okay. Then you're going to want to open a business checking account for the holding company. And then boom, you've got your mothership started. Now remember, there are going to be some costs that are associated with this. None of this is free. So just remember that. But here's step 2. Form or acquire a subsidiary company or identify your assets. Next, identify what your holding company will actually hold. And I actually would probably start with that first before you do anything, right? What is the holding company actually going to hold? Get super clear about that. I would probably do that before I actually go and do step 1. So I'm going to amend that, right? And you're seeing this happen in real time. Huh. That could be a new LLC for your consulting business. It could be your rental property LLC. It could be your digital product brand. It could also be stock in someone else's business. Each of these should be separate legal entities, or at the very least, a well-documented asset. Step 3, assign ownership. This is the part where you begin to connect the dots. Your holding company becomes the owner of the subsidiaries. For LLC, that means the member of the LLC is listed as your holding company. So I'm going to give you an example. Hey, your coaching business, Level Up Coaching LLC, is owned 100% by Elaine Holdings LLC. You will need to update your LLC operating agreement, which is the operating company, to reflect that. You will open bank accounts for each company that track everything centrally from the holding company, the holdco. And congratulations, you're now building a structure and not just a hustle. Step 4, let's talk systems. Because this is where a lot of people fumble the bag. Each LLC or entity must have its own bank account. They need separate QuickBooks or Xero or Bench, whatever finance management tool you're using, or at least well-tagged accounts if you're using spreadsheets. Should document transfers as loans, capital infusions, or owner distributions. Do not commingle funds. Do not guess on taxes. Hire a business-savvy CPA, ideally someone who understands multi-entity strategies. Step 5. Build your team of advisors. You are now running a mini conglomerate. Congratulations. And you're going to need support. So build your squad. You're going to want a CPA or enrolled agent for tax planning. You're going to want an attorney to draft or review operating documents and even maybe contracts. You're going to need a bookkeeper to maintain clean records across each one of the entities. You'll need an insurance broker to cover liability and asset protection for not for the holding company, but possibly even the businesses. And if you're in the creative or coaching spaces, you want to bring in a brand strategist or licensing expert as well to make sure that you're protecting that brand. And now, here's a bonus use for a management company. This one is advanced, okay? Advanced, but also powerful. You can use your holding company as a management company. This means it provides shared services like administration, marketing, operations to the other businesses. Now, here's what this means you will invoice your subsidiaries for these services. The hold code generates its own income and deductions. This is what real estate syndicates and consultants and digital empires do to keep control of centralized, to keep control centralized, right? Now, let's talk about when you should do this. There really is no perfect time, but here's something for you to consider. Or when you've got two or more income generating streams of income, that's a good time. When you're ready to own and protect intellectual property, content, or property. Also, when you're planning for growth, fundraising, or succession. And it doesn't need to be fancy, it just really needs to be functional. Okay. Now, I want to give you some resources, right? Because I don't want you to go at this alone. There are really great resources out there. There's nolo.com if you just want some legal basics. There's the irs.gov, once again, to get your EIN number and tax entity information. There's some great YouTubers, Anderson Advisors, Clearview Tax. There's Carter Cofield. Getting a CPA, search for someone, once again, who's experienced with real estate or multi-entity businesses. You might want to even ask them, how many multi-entity businesses do you work with right now? How many customers do you have that you're currently doing this type of work? And can I get can I get a reference from them? Either can I call them or can they send me an email or a letter? I'd love to talk to them about what their experience has been, the good and the bad, right? There's also, uh, there once again, there's lots. You can go to Google to find registered agents. They could be really great for having affordable filing services across different states. Um, and there's lots of different ways to, some states even have whole operating agreements that you can just download that are state compliant for that particular state. So those are definitely lots of options that you could look into. And also, if you send me a DM or you hit me up on the YouTube channel at Do Different Better, I'm going to provide you with a downloadable holding company starter guide. And so just make sure that you check the description. But I also don't want to be remiss in making sure that you know about some of the common mistakes. So I want to save you some stress. Don't form a hold co if you're not ready to maintain it. Think about you getting a whole new thing that you have to manage and you don't have time to manage the stuff you already got. That is not the time to begin a holding co. Do not commingle funds across your businesses. Each expense, each revenue stream should be singularly going back to that business. Do not skip your CPA or legal consultant just to save $300. I'm telling you, please, 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 please. I do not want to see you on these news streets with a mugshot. Please, I don't want anybody in blue windbreakers coming into your home or to your office. So please, please, please make sure that if you're going to go down this track, you're going to do it right and by bringing in professionals that will help you get this done correctly. Don't build this on vibes or for clout. Structure it on paper. Remember, it's easy to set up right, then clean up a mess later, which will be far more costly to do. Okay. So now let's run it all back real quick. Okay. A holding company can hold assets, business, IP or intellectual property, or investments. You can set it up like any other LLC, but its job is to own and not to operate. Each operating business or asset should be separate and protected. You'll want to build your advisor team early, CPA at the minimum, attorney, and bookkeeper. Next, you want to set up your accounting from day one. We want to leverage a holding company to use it to protect wealth, not just flex on business cards. And it's not just about building a brand, it's about building an infrastructure for wealth. So, that was a lot. And I hope you loved every single minute of it. But I'm wrapping up our deep dive into holding companies. So, whether you're a multi hustler, you're a real estate investor, you're a digital creator, or a legacy minded founder, you now have a blueprint to run on. Remember, corporations and investors don't think in hustle, they think in entities. And when you start thinking that way too, you stop chasing checks and start building systems that print them. So don't forget, if you come to see me at Do Different Better on YouTube, I've got your free holding company starter guide from the show notes. And don't forget to like, subscribe, and share this episode with somebody who's ready to boss up and structure up. This is the Do Different Better Show, and I'm your humble host, Elaine Rasmussen. Stay brilliant, stay banked, and I will catch you all next week.